Sweet.
Okay.
Okay.
So, and the thing is, my premium just ended the premium account, so I'll wait till Black Friday. So
Uh-huh.
I'll just teach you all of it right here. Okay, that
Sure.
won't be an issue. Okay. So, do you have any specific questions? So, will you ask them along the way?
Yeah, sure. I can ask them along the way. Definitely.
Along the way. Okay. And the thing is, you know the basic smart money stuff, right?
Yeah, yeah.
I'm sure you do. Okay. So now the problem is like how to choose the right order block, the right POI.
Yeah.
Yeah. Okay. So I'll show you what I basically do.
Mm-hmm.
Like so. Okay. Let's start. So say this is the weekly time frame. Okay.
Mm-hmm.
So now most of the intraday traders, what they think is that for us, like for intraday traders, the most important charts are the 4 hour, the 1 hour, 15 minute, 5 minute, or the 1 minute. That's how they think. Okay. But for me, the most important chart is the weekly chart. Okay.
Okay.
Because you just have to determine just the next candle. Okay. Let's say that we are getting the bias for the next week. Okay. We just have to determine one single candle. If this candle will go up or if this candle will go down. That's all we have to determine. Okay. So can you understand what I'm telling?
Yeah, yeah,
It's just one single candle. The next candle, it has to go up or down.
yeah.
Either way, but it cannot go anywhere else. It has to go up or it has to go down.
Mm-hmm.
So that is what I would do. Okay. And then once I get the bias, what I do is I'll just play along. Okay. And
Mm-hmm.
then if we drop down to the daily, I'll drop down to the daily and I'll find what are the reasons for market to go up or down. Okay. So now on the daily, this was our structure. This right here.
Mm-hmm.
Price went higher
That's
highs.
that's what I was definitely going to ask you for. One of my
Yeah.
issues is like directional bias.
Directional bias. Yeah,
Yeah.
I'll tell you how I get it.
So this is
Okay.
perfect.
Yeah. So this is how I do it. So price went higher highs, higher lows, higher highs, higher lows, and then took out this high, higher highs, and then it came back down. So now what we could anticipate is that price will go back up, making a higher high. That is what we're gonna target because we're in a bullish market structure.
Mm-hmm.
Okay. So now once a range is created, so I'll tell you this: there's internal range liquidity and external range liquidity. Okay. So
Mm-hmm.
once a new range has been created, there will be internal range liquidity within that range and external range liquidity outside of that range.
Mm-hmm.
Okay. So now price did this. This was our range now. It went higher highs, higher lows. This candle took out liquidity from these lows and
Yeah.
then broke structure to the upside. Okay. So now we can classify this candle, this bullish order block, as a strong low. This low because it did this thing. It took out liquidity from these lows and then it broke structure to the upside.
Mm-hmm.
Okay. So once that happens, that becomes a strong low. So to be a strong low, it has to do a manipulation and then break structure. Okay. So now we can expect this low to hold. Okay. So what I would do is I'll just wait until price gets here. That's the very basic. That's how the smart money traders are taught. That's the very basic.
Yeah.
So I'll tell you this. So now price went up and then came back down into this candle, the last push down before the push up, and then pushed price higher. Okay, and then took out this high, took out this high.
Mm-hmm.
So now our new range would be this, from this low to this high. Okay, and even though this seems like equal, relatively equal lows, but they were not equal lows actually. Price took out liquidity from these candles. This
Yeah.
candle took out liquidity from all of these lows.
Mm-hmm.
It took out liquidity and then went higher. So like I told you, this candle did the manipulation and then broke structure right here.
Mm-hmm.
It broke structure to the upside. So now a new range has been created. So now our new range would be from this low to this high. Okay. So once a new range is been created, now imagine we were right here. Okay. So now external range liquidity was here. Previous external range liquidity was, now this was the previous range from this low to this high. That was the previous range, right?
Yeah.
So then price came back inside the range, got all of this internal range liquidity, and then rallied back up to get the external range liquidity. Okay. So once the external range liquidity has been taken out, it comes back inside of this newly created range to get the internal range liquidity. Okay.
Mm-hmm.
So by internal range liquidity, what I mean is not only equal lows or equal highs, not anything of that sort. I mean the inducement. Okay, the
Yeah.
inducement is the most important thing before
Yes.
choosing a POI. Okay, inducement or the trap or anything. So what I would basically do is once a new range has been created, I'll mark the discount and premium prices. So now I have a rough idea that anything above this, below this would be a discount price, and anything above this would be a premium price. So now
Mm-hmm.
price to push back higher, it has to come inside the range and get all of the internal range liquidity, and then it has to come into a premium. I'm sorry, for a discount price for sure,
Yes.
because only once price is lower, people would buy again. Not the
Mm-hmm.
people actually. Now we're talking about smart money. They'll push price down lower just to buy again. Okay, to
Yeah.
accumulate positions again. So now what we could anticipate is that now it came back, and then now what we could expect is the price to go higher, because now the intentions of the range has been fulfilled, because
Because
you
it
see
took out the internal range
took out the
liquidity.
internal range liquidity.
Yeah.
Yeah. And now what I mean by liquidity is not only equal highs and equal lows.
Mm-hmm.
Okay, what I mean is this. Now can you see what price did here?
Yeah.
Took out liquidity from these lows and then broke structure.
Mm-hmm.
Okay, and then broke structure to the upside right here. It broke structure and then it retraced. Okay, it retraced and then went back higher. Okay, so now what the retailers are taught is that if after break of structure, if price comes back and retraces and then breaks structure once more to the upside right here, this the retailers would consider this as a strong low. Okay,
Mm-hmm.
because it retraced after the break of structure and then gave us another break of structure. You see that?
Yeah.
So now what the retailers are taught is to place their stop losses and sell stops below this.
Mm-hmm.
Okay, because they think this is a strong low. Okay, so then, and the next thing is smart money traders would go long on this POI, right, on this order block.